All right, good morning, good afternoon, and good evening, Alpha Traders. This is your Monday version of Crypto in Clown World. And coming to you live from the Crypto Caravan. Still just humming around here in Carson City, Nevada. Probably a couple more weeks and I'm out of here. I got something I need to take care of on the 28th. Good thing I really didn't leave. I would have had to come back out here. So, worked out for the best. So what's going on with Bitcoin? What a boring weekend, right? Pretty boring, would you say? Saturday and Sunday. Had a little dump right before the close yesterday when the futures opened up, right? Bitcoin recovers. Where did Bitcoin run to? This is the Alpha Trading Volatility Range Estimator. Okay. What we have here are price action volatility ranges and normal and Laplace distribution levels. Bitcoin opens up. White cross line here, white cross line here. This is the 68.3 Laplace distribution range on today's candle, on the daily candle. Bitcoin gets up above it. Within the first 4-hour candle, finds some support on top of it, has a little pump. Where did it pump to? This red dotted line, this red dotted line, and this yellow dotted line. This is the new weekly price action volatility range. Bitcoin shoots a 15-minute candle up. Where does it test? This red line right here, this is the first resistance level to this daily price action volatility range. Look how this set up. The new daily price action volatility range, this red line, yellow line, literally lined up. Top side on the bottom of the new weekly, bottom side right at the top side of the 68.3 on the daily, right? Where we found support on the bottom side of the weekly. Then what does Bitcoin do, right? In that 4-hour candle, runs up to the dollar, tests the center of the new weekly price action volatility range. You get two 15-minute candles. Bitcoin pulls back a little bit, finds support on the top side of that resistance level on the daily that turns support for a very short time, as you can see over here, but then runs up, breaks through the middle of the weekly and tests the first standard deviation normal distribution to the top side. That is that blue cross line right there. Since then, we drop back down below inside of that first resistance level. Bitcoin has made a couple attempts to get by the weekly, the center of the weekly price action volatility range. Rejection, found support on the bottom side of the weekly. Are people looking at this? If you're watching this on YouTube for the first time, you need to understand these aren't just bullshit support and resistance lines. These have there's no data sets backing any of this. This all has to do with volatility. Over an entire day or weeks, price action volatility, this indicator calculates where these areas are at. It's a beautiful indicator. Now, this last 4-hour candle of the day so far, these two white lines right here, these skinny little white lines, that is this last 4-hour candle's 68.3 Laplace distribution range. So we're going to see. Now, the bears. Where do the bears want this price action to close today? Back down inside this 68.3 range. I'm surprised they haven't pushed a little harder. We do have the bottom of the weekly, though. The bulls are going to defend this area. Where do the bulls want to close today? The bulls want to close above the center of this weekly, right? Preferably right in here, right under the 1SD. Hell, for shits and giggles, it'd be great to see Bitcoin close on top of the first standard deviation normal distribution. This area right here and this area right here, though, this top half of the weekly price action volatility range, the bears are going to defend it with their life, right? They don't want Bitcoin in these next couple days to close a daily candle above 39.9. All right, it's 39.903. Let's even be safe and say the middle of the monthly. Here, this red cross line. Nope, sorry, bottom of the monthly range. There's the yellow. There's the center of the monthly. That they do not want the daily candle to close above 40,150 area. So that's what's going on the volatility range estimator. Sorry. Now, let's go on to our probability chart here. Still using the same projections. There's a little common theme here, right? Since Bitcoin had this pullback, let's get an exact number too. Almost 52% pullback, right? From the all-time high to the low down here, right? About 33.2 area. And as you can see on that weekly candle, where did Bitcoin go down and find support at? Real support, the distribution. First standard deviation normal distribution, pulled back up, had this run, making another charge at the mean of the projection from the 41K low of this Laplace distribution projection. That's what you're looking at here. So this pink line, this blue line on the projection, this is the 68.3% range, and this is the mean, right? This blue line, this pink line, that's the 95.4% range. And that blue line and that pink line, that's the 99.7% range. Bitcoin has not been able to close a weekly candle above the mean of that projection. Look where the mean of the projection is. It's not at these candle closes at this data set, right? Do you know how many people were using that area, right? Especially, say they were short. And they're like, okay, well, I'm gonna put my little goofy ass stop losses right above that area just a little bit. Look at the wicks. This is the true area, not the bottom of these freaking candle closes. This is where these people just get so damn confused. It's ridiculous. Using traditional technical analysis is going to get you wrecked. You're watching too much YouTube Jimmy, right? You're getting your TA. You're getting your lessons about TA from the wrong people. They're using the wrong type of analysis. Volatility, probability, and statistics is the way to go. As I wipe another dog hair off my monitor. Hold on here. Wonder where all this dog hair is coming from. Oh, wait, I got 3 dogs. Maybe that's where it's coming from. Okay. I need a maid. Fuck. I'm going to say it again. Bitcoin needs to close a weekly candle above the mean of this projection. If Bitcoin can get up here and close a weekly candle right now, this week, it's going to be more than a second standard deviation normal distribution move. That's a tough road to hoe for Bitcoin. Why do I say that? Listen, volatility trading is all about probabilities, right? The second standard deviation normal distribution is right at the mean of that projection. There's a 95.4% chance BTC does not close a weekly candle above that. So what's the probabilities telling you? The probabilities are telling you it's not going to happen this week. What would be great is to close maybe 1.5 standard deviations, maybe close this weekly candle about 42,250, in between 42,250 and 42,5 would be awesome. Then you can open up a new week, and it's only going to be a first standard deviation move to get up and close above the mean of that projection. But I'm telling you, if Bitcoin's data set keeps dicking around down here below the mean of this projection, and look at the 4-hour chart, look at the ultimate power mean indicator, look at the power mean band, right? This big, that's all power means. Look how tight all this is. And also you've got the 9 length, the 33 length, and the 99 length variance log moving average with the reverse wave trend, with the reverse Fisher. You guys, that is all in a, I mean, are you kidding me right now? 2.8% range. And if we're talking dollars wise, we're talking 38.8. It's $1,000 range. Now, if you understand volatility, probability, and statistics, do you understand what's getting ready to happen right here? Bitcoin is either getting ready to flush like crazy, or it's going to pop to the top side. One of these 4-hour candles is going to close above this reverse Fisher. Let's even say above 40K, and then we're going to make another charge to the top side. Even the standard deviation bands, the dots, look at them squeezing on the 4-hour. right? We can even see this better. I mean, look at the bands. Volatility is squeezing BTC's data set right now. When that happens, BTC likes to move. So, yeah, say, Ron, we're crazy over here. We like to change our clocks up and shit for some stupid reason. Oh, it's because of the farmers. No, it's not. Still haven't quite figured out why the hell they like to change their times, but they sure the hell do. Okay. This is ominous right now. This is all I can say. I can tell you one thing 100%, right? I'm not YouTube Jimmy. I'm not going to lie to you. You know what I'm going to tell you? BTC's data set is going to go up or BTC's data set is going to go down. That is typical of what the most volatile asset that we have ever known does. That is why we trade low time frame volatility. We don't care, right? As a long-term holder, Bitcoin, go to the moon. Do I think Bitcoin is going to be over $100,000, making its way at some point to $1 million within the next probably 5 years? 100%. I agree with that. I really think. Look at the FUD that's out right now about Bitcoin. Oh, the European Union is going to ban Bitcoin. People that have been in crypto for a while, you look at an article like that and you just laugh because you know it's a lie. You can't ban Bitcoin. All you can do is go to the exchanges that sell Bitcoin and tell those exchanges, look, you can't sell Bitcoin anymore, right? People will always find a way how to get Bitcoin. They can't, it's a joke. So they try to deter people from buying, right? They're taking advantage of they're not educated on the subject. So they want to create FUD like that. And we all know that when Bitcoin was down under 10K before we had this massive run to $70,000, that people were still FUDing Bitcoin, not believing in Bitcoin. And now that it made that massive run, they're like, hey, can you pull back? Can we get Bitcoin? Can we get a pullback so we can get an entry? And I'm telling you, these guys really would love to get in Bitcoin around 10K or 20K. So don't think this thing can't go down. They're all in cahoots, right? They're all in cahoots. That's why they are trying to FUD this market up once again. So we're going to have to see how this plays out. It's very interesting. And now while I'm on the volatility range estimator, we're going to go over here to SPY and Nasdaq real quick. Going into the end of this stream, I want to see what happened, where the new weekly is. Yeah. Okay, so coming into the new week, the weekly price action volatility range. Wow, came down pretty damn hard. Now, here was SPY's chance, right? Pre-market, not much happened. Not much happened at all. But look at the wick down. Boom. SPY found on this 15-minute candle, found support on the top side of the 68.3 Laplace distribution range, tried to run up above the new weekly range, immediately dumped down. Where did it find support? The bottom side of the 68.3. There was a 68.3% chance today the SPY's data set was going to close in this range. Did it? Sure did. Sure did. And it is below the weekly. And now the weekly is below the monthly. Traditional market's looking like shit. That's all I got to say about that. Let's see if Nasdaq did the same. is. Yep. Nasdaq was going sideways, just like Bitcoin, right? Look familiar? Bitcoin was not able to sustain itself above the center of the weekly. Bitcoin made that one run up to test the first standard deviation of the top side. Nasdaq didn't even do that. And then Nasdaq, right when pre-market and the traditional markets opened up, these are the Nasdaq futures, right? CMEs. So they opened on Sunday evening. Dumped out just like SPY. Now, Nasdaq closed below its 68.3. Nasdaq closed below its monthly first support level. It tried to get back up and right now, I'll tell you what, if Nasdaq can close this in the next 2.5 hours or about 2 hours, that's right, because we got the time change, close at 5 now, 3, yeah, we got 2 hours and 15 minutes till the daily close now. That won't look as bad. But considering it is down here, it's not a good looker. It's not a good looker. Boy, that first weekly support level is way down here too. I always try to get a read and see what these traditional markets are up to. Nasdaq and SPY are literally looking ugly. Below the weekly ranges. No, SPY. Ref on me. Both of their weekly ranges have been tested, right? So there's no weekly range. It needs to be tested. Remember that. So when Nasdaq's down here closing below, here is SPY's first support level for the monthly range. Nasdaq right now is below its range. If Nasdaq until tomorrow pre-market does not get its ass back up above, and I would say up in the weekly range by tomorrow morning, SPY's are going to have a rough day tomorrow. Probably Nasdaq. If Nasdaq dicks around down here going into the new day, doesn't make a charge back up here, it's going to be ugly for traditional markets tomorrow, where you could literally see Nasdaq dropping down into the 12.6 area, right down in here. This first support level for the weekly, and see how that holds. And that's at 12.647. Where is SPY's? A lot closer, right? So you could see SPY down here by the second weekly support level, 405. All right, let's go over here real quick. Let's throw SPY on. Let's see what the new weekly is, and of course, SPY dropped down below. Right, 417.26 was the downside of the weekly candle of the Laplace distribution range. Pulled back up, closed right up inside it. Why? Well, this week there's a 68.3% chance. There's the top side pink dot right there, or 23.22. So in between, right here, there's a 68.3% chance SPY's weekly candle closes in that range. So this is, where's this at? Where's the 95.4? Oh, okay. So to the downside, this pink dot right here, 404.83. That is this weekly candle's 95.4% Laplace distribution range. Right there. There's confluence with the second support level for this new weekly range. This is not going to surprise me at all if it gets hit tomorrow, to be honest. Depending, like I said, we need to see what Bitcoin and Nasdaq does tonight. Keep an eye on that for sure. Keep an eye on that. Now let's go over here. I don't need. Yes, let's turn all you off. I just want the current candle probabilities, my friend. There we go. So right now, though, here was Nasdaq 68.3. Top side 13.425. Bottom side 13.154. Right now, Nasdaq is about 10 points below. There it is right there. There's the pink dot. You can see this weekly opened up, went to the top side, tested that, right, overnight. Nasdaq tested the 68.3 to the top side. Right now, it's below the bottom side. So Go over here again, switch this up to Nasdaq. Yep, the second one is at 12.6. Let's just say 12.650. Pretty close, man. Pretty close. It's really close down to its 95.4. It's not going to shock me at all if you see Nasdaq and SPY test this weekly 95.4 plus distribution range. To be honest, it could happen. It could. So let me see something real quick too. Now let's match them all up. And I'm going to use the index, not the futures. Let's see. What is the first weekly or monthly? What is that? 36.4. The weekly's at 35.770. 6.4, 35.770. Boop, 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 boop. Yeah. So it would Bitcoin, if Bitcoin were to keep up, or if everything was going to do similar, you're going to see Bitcoin come down here and test the 68.3. I tell you what, traditional market's looking a lot more uglier than Bitcoin is right now. A lot uglier. And if you look on this macro time frame too, this doesn't look very bad. This doesn't look very bad. Are the buyers, and this is what I told somebody the other day, and they just kind of giggle. They're like, oh, well, that's not telling me anything. I'm like, look, trading's easy. Don't complicate it. There's more sellers than buyers, or there's more buyers than sellers. And if there's no resistance from either side of that equation, say there's a lot of buyers, right? And the sellers are just holding off. They pulled all their weight, right? It creates divergence. This is how this market works. Any market works. So that's what you got to understand. If the price is going down and somebody, oh my God, what's wrong with the market? Well, there's more sellers than buyers. Price is going nuclear. We're going to the moon. What's happening right now? There's more buyers than sellers. The thing you need to realize, though, and is why we use the indicators we do, especially the divergence between returns and price action, is when you're using that type of divergence, it's telling you about that strength, right? It's like, is the other team even putting up a fight? Because if they're not, they're storing away their firepower, right? And when that divergence starts to take hold, boop, it goes right back the other way. Bull div, bear div, hidden bear, hidden bull. It's all created because that imbalance in buy and sell pressure. Bottom line, people want to complicate it. Oh, well, it's the war, it's inflation, it's blah 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 blah. They're going to fill your ear holes with honey. YouTube Jimmy's going to pour some fucking ear hole honey, right? And try to get you to believe some bullshit. It's not true. There's either more buyers or more sellers. That's the bottom line. It's not complicated at all. And when you trade low time volatility, hello, that's where the golden pocket is. Fuck the Fibonacci unless we're talking about natural creation. That's what Fibonacci is good for. It creates everything, right? I'm sure we've all seen the examples of how the Fibonacci sequence is in all of creation. When it comes to trading, give me a break. The golden pocket is trading low time frame volatility. Yes, yes, yes. Oh shit, what's happening here? Funny. Anyway, right. That was my little mini rant on market analysis. So when the next time, if you're watching this on YouTube for the first time and you love to just watch YouTube Jimmy because you think he's some brilliant ass that knows his traditional technical analysis of the markets, I'm telling you right now, they're full of shit. Do you really think they trade? Very rarely. They're making a living off you. You are their liquidity because you're watching them. You're giving them clicks on YouTube. You're buying their stupid trading programs. You're buying their stupid traditional technical analysis indicators, right? You're buying their stupid trading psychology courses from literally the one I know for sure. You're buying a trading psychology course from a guy that's got a 0.38 win percentage. Are you shitting me right now? Why would you do that? Why don't you learn to trade volatility, probability, and statistics and start winning 7 or 8 trades out of 10, for crying out loud? But your P&L is going to look even bigger, right? Because one thing we know about trading psychology is there's only one thing you need to know. Don't be emotionally attached to your trade. If you lose a trade, scream at the monitor, get it out. Don't pack it down. I'm a man, I'm going to pack all this shit down hard and you're going to have a fucking heart attack one day. Emotions are natural. These guys are jokes. Okay, guys, first thing you need to do, you need to go to CVS and you need to buy a journal. You need to start journaling your trades. You need to put down how are you feeling when you took that trade, right? How did you feel when you lost that trade? Well, Mr. YouTube Jimmy, I was pissed off. I wanted to throw my monitor out the window. I mean, it's a joke, you guys. I hope I'm putting it in context where you can understand how big of scammers these people are. They are feeding on because you're not educated, right? In the proper way to trade these markets. They're all volatile, but Bitcoin takes the cake. When you got YouTube Jimmy out there literally telling you not to trade low time frame volatility, but to swing trade Bitcoin, wow, setting you up for disaster. If you think you're going to swing trade Bitcoin and ever be a profitable trader, I got a news flash for you. Look, you're going to make money in a bull market. The problem with Bitcoin is, look at it. I mean, it's insanity. Even on the run from whatever, $250 to $20K, the run up to 71,000. There was massive pullbacks that liquidated people because these people do not know how to trade. Instead of taking profit, they add on to their position and they get over leveraged. It's simple. Don't be emotionally attached to your trade. Take your profit and limit your losses. That's my sermon for today. And that's a good time to wrap this stream up. And if you're watching YouTube for the first time, we are Alpha Trading, and we trade volatility, probability, and statistics, and we love to teach people to do the same. The link to our Discord is in the description of all of our videos. Come into the Discord. Check out the shop channel. You have access to that. It will show you the 2 different levels of Discord that we offer that gives you access to the Alpha Trading system. We do not sell indicators at Alpha Trading. We sell you access to use the Alpha Trading system. That's what we do here. Open up a support ticket. Tell us what's on your mind. We'll answer any questions you have. We'll show you examples. If you want us to show examples why this is a good way to trade and why trading low time volatility is the way to trade and why swing trading is not the way to trade, or even macro, look, either trade low time frame volatility or just buy and hold, right? Those long-term holders are going to be the ones that are going to make a lot of money. But in the meantime, trade that low time frame volatility. And wherever you're doing that in this beautiful big blue marble, have a wonderful, wonderful rest of your morning, afternoon, and evening. We'll see you tomorrow at 2 p.m. Pacific Standard Time. I'll see you guys.